But your next guest says you may want to stop trying to guess what's going to happen and just get on board with some stocks that he likes, regardless of what happens. Let's talk about it all with Bryant VanCronkhite. He is Senior Equity Portfolio Manager at Allspring Global Investments. We've got your picks, but, maybe comment, Brian, on what you heard Loretta Mester just said. I love the fact she came in. She was brutally honest, and I appreciated the fact that she kind of said, listen, the Fed maybe whiffed a little bit.
Yeah, I think she's absolutely right. I think, number one, right now, I think the Fed can just be on hold. They don't need to do anything. They accomplished their mission out of the gate, and today you see unemployment at very low numbers and stable. Inflation is moving modestly higher, but not in an alarming way, and so I think the Fed's cutting cycle is over unless something breaks. And if something breaks, it's usually very bad for investors in the short term, but the Fed will then step back in and do their job at that point in time. But if you're on the Fed board right now, why get involved? Just step back and say, I don't know what's going to happen in regards to tariffs, immigration policies. I'm just going to step back, not cause any trouble, and just be here to pick up the pieces if something does break in the future.
As a fund manager, your job is to take the current and future economic situation, plug that into your models, then come up with some stocks. So you like, let's say, a Canadian Pacific, for example. Does it matter what the Federal Reserve does vis-a-vis your investment in a Canadian/American railroad?
Well, the Federal Reserve always matters, right? They always have the ability to drive markets and the economy. But in a moment in time like we have today, where I think they're going to be less involved than they were over the past 12 to 24 months, I think you want to own businesses that have financial freedom. Financial freedom is something we measure through the company's balance sheets, and it's the ability for them to play offense with their capital allocation decisions. For example, Canadian Pacific, the railway, made a big acquisition of Kansas City Southern a few years ago. That acquisition allows them to be the only railway that controls transnational from Mexico through the U.S. to Canada, which is a really important rail to have. Now, what's great there is that the benefits of that are still way ahead of us. No matter what happens with the economy, we're going to see volume increase. We're going to see them gain length of haul. We're going to see margins expand through that acquisition. And that's going to be really good for us as investors. Now, we might get tailwinds or headwinds, but they're on their own doing a great job.